Good morning. So big news. You got a credit card. You're buying a bank. You'll be able to take deposits, make loans based on those if that charter goes through. This seems like part of this kind of new challenger bank, neobank movement. A lot of focus on Chime out there. What unique mechanics is SoFi going to be able to offer here?
Well, thank you for having me, John. The national bank charter is an important element to allow us to really differentiate SoFi Money, but also to lower our cost of loans, which will allow us to make more loans to more people at lower interest rates. In addition to that, we will be able to offer an interest rate on SoFi Money that's incredibly competitive. We want to offer one of the highest interest rates in the marketplace and be able to do that across any type of account that you have your money in with no restrictions. As long as you do direct deposit with us, you'll get a high interest rate, no restrictions on the use of your money, whether you want to pay by your phone, pay with a debit card, or do electronic bill pay, in addition to being able to deposit cash. So our goal is to give you the best of checking and savings in one account, like SoFi Money, and getting a national bank charter will allow us to do that by lowering our cost of loans and using that excess cost to increase the amount of interest we can provide on deposits. We think we can provide a very differentiated product and service, not to mention service more people more broadly, grow the company faster, and allow it to be more profitable.
So, I mean, the highest interest rate out there isn't what it used to be. I mean, I remember it seems like a long time ago now, 2-3%. People were like, wow, that'd be great. Now, in the most competitive, you're getting like tiny fractions of that. And it seems like a lot of fintech players are turning to Bitcoin or turning to stock trading as a way to attract the consumer audience. Is that an important component of this? Are high interest rates on savings accounts enough?
I think there's a couple of different ways to serve our members well. When we first launched SoFi Money, we were able to launch with a high interest rate. We had a partnership that allowed us to offer 2.25% interest. But because we're not a bank, we have to rely on someone else to provide us a partnership that sets that interest rate for us. And so now our interest rate is very low because the federal funds rate has dropped to essentially zero. When we have a bank charter, we'll be able to determine what interest rate that we want to provide and not be dependent on anyone else. We have the capital and the financial model, because we're a digital company, to provide a much more attractive interest rate on SoFi Money than we're providing today. So getting the national bank charter will make SoFi Money a lot more appealing. It'll have a high interest rate. It'll have early availability of your paycheck. It'll have overdraft protection, in addition to doing everything you want to do on your phone: pay a friend, pay a bill, pay at retail, or pay with a debit card. In addition to SoFi Money, we also offer SoFi Invest, which is another way to get your money right. And SoFi Invest is the only place that you can buy stocks without paying commissions, fractional shares, ETFs, and in fact, 5 of SoFi branded ETFs, 2 of which have no load, and then finally also robo advisory funds that we've created. And so we're trying to give you best of both worlds as it relates to spending, saving, and building your investment portfolio across both of those products. And as you mentioned, we now have SoFi Credit Card, which is a unique way for our members to get great rewards. We double the rewards that you get with SoFi Credit Card when you redeem into SoFi Money or you redeem into SoFi Invest for fractional shares. In addition to applying those rewards to an outstanding loan if you have with us. And so we're really a one-stop shop that's now showing the world how our products are better when you use them together.
Shepard Smith here. Thanks for watching CNBC on YouTube.